Hey everyone, welcome back to the MHP Show Podcast. I'm your host, Derek Vickers. On the MHP Show, we're talking mobile home parks, operations, anything to do with the asset class. Sometimes it's me talking and running my mouth, or I have special guests on, like I do today. Before we get started, Victory Capital, we just wrapped up our Fund 1. And look, if you'd like to know and learn more about what we're doing and get some money off the sidelines and into this awesome recession resistant asset class and tax advantaged asset class, I know Tim knows about that. But you can reach out to our team at invest@victorycapital.com, or you can reach out to me directly on social media or email derek@victorycapital.com. So now I got a very special guest, second time guest on, Mr. Tim Woodbridge with WCG Investments. What's up, man? How you doing?
Good, dude. Thanks for having me on. I'm glad we could run our mouths together.
Yeah, yeah. It's fun, man. It's fun. I see you got a guitar back there. I know. Is it Matthias, a guitar guy too?
Yeah, he's the guitar guy. I'm the bass guy, the bass guitar guy. So, you know, you pick up drums, we'll have like a mobile home park band. How about that?
Dude, that'd be awesome. And we could actually write songs about stories in mobile home parks. I think it'd be a
It,
hit
it sounds like those would be country songs, it'd
for
be
sure.
all about the crazy stuff that happens in our mobile home parks.
Yeah, there's nothing crazy that happens in mobile home parks. What are you talking about?
Yeah. No, I'm just trying to get eyeballs. I'll just make up stories right now and just
Yeah,
everything we have. It's super quiet, steady. Nothing crazy's ever happened there, man.
yeah. I know how that goes. I see you have Sam Zell's book back there because I actually am going through this book for I don't know, the second or third time, and it's just a fascinating book. Like I think the way he operated was very very interesting. You pick up more out of that book every time you read it. So I just saw that, and I'm actually in the middle of that again right now. You should definitely take a look at that book. What did you take away from that book?
I mean, I love how he found value where other people weren't seeing it, and how you know, uh, all these businesses were going under, and he's the grave dancer for a reason, right? He saw, hey, this is probably where we could buy this for cheap because they're doing it wrong, and then let me extract the value in these different ways. And I mean, so what we do with mobile home parks, like everything that we get under contract, it's like, okay, what's the business plan for this specific thing? Even if the previous owner was running it awesomely, like, okay, is how can we extract the value? Is it like, I don't know, I would imagine you guys are probably similar to us. We're not like the institutional capital coming in and just wanting a perfect deal out of the gate, 100% tenant own and just, coupon clipping. Like we gotta force appreciation. We got to make value out of things. We got to raise the value of the parks to get our investors all this capital that we're looking for, all these returns. So yeah, man, it's like how can we look at this differently? How can we make this work a little bit better than the last person's making it work? Plus, I like, am I being too subtle? Just the whole like I feel like the same thing. I say what I mean, and like no one has to guess on what Tim Woodbridge is thinking. It's like, nope, it's been said. I'm not subtle about it.
Yeah, no, that's good, man. It's funny you mentioned people wanting perfect deals like the institutional capital. We've been talking to some larger capital allocators, and some of these guys want like, hey, they want the perfect deal, but they still want, a 20 IRR or more. And I'm like, you're in the wrong business, dude. Like
Yeah,
they're like, well,
yeah.
I don't like the quality of this asset. I'm like, okay, like you're going to buy this at a 7 cap or buy the thing that you're talking about at a 4. Like it doesn't.
It's a trade-off. It's a trade-off. Everyone wants the perfect deal. especially it cracks me up. Newer people, they're like, I'm looking at only 100 plus pads or 50 plus pads or whatever, all city water, city sewer, all tenant owned. And I'm like, it exists, but it's probably not at the price point you want to pay. Like the you're going to make an offer on it, but the guy who's institutional capital is going to come in and make a better offer because they don't have to get the same returns that you do because it just the more you do it and the more you're talking to bigger people. I mean, I've talked to some institutional capital guys too, and it's just like, okay, like I get it, but you're kind of living in a fantasy. Like
Yeah.
I get paid well because we solve these problems. We make it into something sexier, but it's still at the end of the day, it's a mobile home park. Like all the people who think that they're going to come in and it's going to be like, oh man, this is going to knock my socks off. It's like, no, lower your expectations because that's just the reality of it. I got a friend who's walking some mobile home parks right now, and he's like, I'll only get into it like if you guys are working on it with me because I know you guys know what you're doing. And he just is doing like preliminary on-site DD, and he's like, man, this place is rough. And he's sending pictures, and I'm like, no, that's pretty standard.
Yeah.
Looks pretty
Yeah.
good. That like I can see the rent roll that they're sending matching up with that. So like maybe you need to lower your expectations because it's not going to be an A class thing with the what you're paying and the rent roll. It's just not. So just lower your expectations a little bit. Some people live a little rougher than I live, and that's totally fine.
Yeah, yeah, right, right. I remember I was walking through one of our Tampa parks with code enforcement, and we had paved the roads, put vinyl privacy fences up, put new solar
Nice.
lights up, new mailboxes, siding and skirting on the homes. Like this place was a freaking 180 from what it looked like. And she made a comment like it was still a dump, and I'm like, just because you wouldn't live here doesn't mean it's not 1,000 times nicer, and it's not, it's clean, it's safe, and it's affordable for people. So,
Yeah.
yeah.
What what
So,
what do you want? It's I I I think that's a big part of the of what we do. It's like we're going against this perception of things. It's like, oh, this place sucks. It's a shithole, and it's like, bro, like just because you wouldn't live there doesn't mean this isn't providing value to the people who do live there. It's
right.
not, it's providing affordable, safe housing. So like maybe get off your high horse and just accept that not everything's the same. How many billionaires are walking around in like a normal neighborhood and be like, I would never live here. Like, come
Yeah.
on,
Yeah.
that's the same kind of thing, and it's just a stupid way to look at things.
Um, what are you seeing out there? Because I'm seeing there's still deals. You have to get more creative. You, there's not as many deals as there was. Like you have to dig and go through a lot of deals, but what are you seeing out there?
Yeah, I mean, first, true. Um, I know. I just put the numbers together for how many things we're closing versus how many offers we're putting out. And currently, I'm like 1 in 19. We're closing
Yeah.
one deal for every 19 LOIs we're submitting. It used to be more like 1 in 11, 1 in 12, but it's like okay, like that's just the reality. More people are looking at our asset and liking it, and especially big money is coming into our asset class. And sure, they're buying that A class, sexy mobile home park, whatever, with low yield. But I think more and more they're buying similar stuff to what we're buying, and that provides a challenge. Like how can we compete with that? I think just like you were saying, we got to get creative. We got to figure out ways to go, neck and neck with that big capital.
Yeah, yeah. It's it was actually satisfying for we closed the deal, I don't know, probably at the end of May or something. and we basically beat out like a very, very large capital group out of New York on the deal. And a lot of times that doesn't happen. I mean, we have a deal that we're working on now. I have a great relationship with the seller, and somebody came in and offered like 1.5 million more than me. And I'm like, I'm not like a low ball pricer. Like I can get pretty aggressive in some hot Florida markets. So my price was like, it wasn't crazy, but it's a good damn offer. And they come in over the top, and I'm telling the seller, I'm like, look, this thing, I'm just gonna be honest with you, it's probably not gonna close there, right? And they haven't, you know how it goes, right?
Yeah.
But
Yeah.
some of these deals that we've been making offers on, and like, hey, we have an offer at this. I'm like, yeah, I can't really compete with that right now. So, but also you like we have to outweigh. It's like so in 2021 we were probably, and this is going to sound crazy to you, Tim. Probably 9 out of 10 deals we wrote an LOI. We ended up closing because it was
Oh,
that
love it.
because the price that we knew we could pay was like, oh my God, yeah, I'll take that from the seller. And so it's not like that anymore. And yeah, I don't know. I don't know. It's interesting. I just have to balance like, hey, do we want to do all that work for less return? And so you have to balance that.
What's funny, so you were talking about like that guy's probably not going to close, and it's probably true. They're going to wait till a week or a few days before the end of DD and then come in with like an aggressive retrade. And it's like, oh man, like and every time we lose a deal, I'm like, dude, I love that for you guys. I super hope that like that closes and you get everything you want. But do you mind if I call you in a couple months and just see how it's going? And
Yeah.
a lot of
Yeah.
times it's like, oh yeah, it was under contract, they didn't close, or they couldn't get the capital, they couldn't get the financing they thought, or they tried to do an aggressive retrade, and it's just like, oh yeah, I get it. I get the game. I totally do. If you want, let's look at it and see if we can do it again. Um, but yeah, it's an interesting climate that we're working through right now. I think we do our best and we just put out a ton of offers, and for everything that I'm not getting, it's just like that's fine. I'm good. We're gonna keep closing. We're in this for the long game. I'm not gonna bend over backwards for things. It's just I don't have to. We don't have to. So like why? If there's these like in 2020 and 21 and 22, all these deals, not you guys, but there's enough people who close things at high enough prices because they thought that it was going to last, and then interest rates went up, and they're either losing things or they're struggling right now because their interest rates are going up, and it's like, why? I don't want to ever be in that.
No.
You guys had the knowledge of Florida. You kill Florida and you know it very intimately. So you knew that, hey, I can go in and make some money on this. But how many people from out of state did the same and got bit? We don't want to get bit. We don't want to, like, I'd rather go low and slow and in 5 years be like, thank God I didn't do that.
Yeah. Yeah. And I think Sam talks about that in his book when like I forget how he puts it, but he's like when big dumb capital comes into an asset class and they're just like, taking whatever, like, yeah, we'll take that. Yeah, we'll take that. Obviously, it screws it up for us, but down the line, um, I think we could potentially get some of these deals to come back around, but I don't know because the other thing I go to is like, the asset class is scarce and it's pretty resilient as long as you have time on your side. I mean, you can't, the only, if you had really short term debt and you bought something, crazily in 2021 and now you're trying to refi, you might have some trouble if there wasn't that much room on the rents. But I don't know. I battle with this, constantly. It's like, hey, because the asset class is scarce, like our rents as high as they're actually gonna be, and like, are we gonna be kicking ourselves in 5 years that we didn't buy some of this stuff for the numbers that we're seeing today? And the answer, I'm curious to your answer, but my answer is like, yeah, probably yes. We'll wish we would have bought some stuff, but at the same time, it's like at that point in time, might not have been a good deal for us.
Yeah, and it same. We're probably going to be kicking ourselves. I mean, I want to buy everything. So like
Yeah.
the desire is there, right? But like at the same time, I mean, I've been in deals that were thin. I've been in deals that are overly hard. And so, I'd rather buy less and buy things with conservative underwriting and conservative business plans that we can reasonably do and then come out ahead of that than like, yeah, we can totally do this. Yeah, I can infill 100 lots in year one, no problem. And it's, like, no, I'd rather go low and slow and not lose any sleep on this. Like if that means I lose out on more deals and I'm less rich in 5 years than I could have been, well, so be it.
Yeah. Yeah. Yeah, and I'm like, so at that deal I told you we beat out that big group on, it's a nice park. It's probably a 4-star park.
Nice.
Very, very low execution risk. It's just below market rents, and there's a couple things that need to be cleaned up, but it's a nice community. And I got to tell you, like after owning that deal for 3 months now, it's like, man, I'd love to buy more deals like this because it's easy. It's easy. And
Yeah.
because a lot of our other deals, there's a lot of execution risk. We're good at at that type of execution. So I think the risk is lower with us because we know that type of deal. But at the same time, I'm like, man, that deal was easy. you know? So it's like
That's
I'm tempted to like, hey, is there a part of the business where we can buy those things, So and have just a longer hold period, and I don't know. I've been jostling with that.
Totally, totally. And I mean, you're ahead of us with more experience, but so we're buying a long-term RV park that's like
Mm,
a very nice asset in a very nice location with very relatively easy levers to pull for the
mm,
business plan. So I predict, and who knows, but I predict that it's going to be similar, where I'm going to be like, oh man, we need to buy more of these. But every time I think of, okay, buying more like these, it's like, oh, you can, but you're paying for it. Like, so my mind goes to, okay, what investor base do I need to work with to do that? Because we're 16 to 20% IRR is kind of our target range for things. Pretty relatively down the line, nothing crazy, but nothing, too tight. So, 16 to 20% net IRR to investors. But for these bigger, sexier mobile home parks with the less moving pieces, it's like, what investors can I work with that only want like 12 to 14% net?
right.
And again, we go back to the institutional guys, and it's a maybe. It's a maybe on that because this could just be my ignorance, but it's like, is that trading cheap capital for working for someone? So like
Yeah.
Matthias, me, like we're both retired from our jobs. I Neither of us want to go back to a job working for someone. I like working with people. I love working with people. I don't like working for people. So if that's the trade-off, it might just not be for us.
Yeah, yeah, and I go through the same thing because I am a rebel entrepreneur at heart, like 1000%. And the idea of that's where I've gotten hung up on some of these, offers and term sheets we've seen from these groups. It's like, I'm working harder and getting less, and then I have to answer to somebody, and I just don't like it. I don't like
Yeah.
it at all.
Yeah. My teenage punk rocker comes out and is like, why would I ever want to do that? Like I'm
Yeah.
having so much of a good time working for myself and working with my partners and in our company. I don't want to. I don't want to. I don't need to. I'm doing fine. I get the shiny object in terms of, man, I'd love to buy that $30 million mobile home park or whatever with these capital partners, but I'm not willing to sacrifice my life right now, man. That it
Yeah.
just it
Yeah.
doesn't make sense.
Yeah. I agree with you, man. How has capital raising been? What have you been seeing out in the capital raising market?
I mean, we treat our investors super, super well, and we get a lot of referrals. And because, we got a little bit of time behind us, and our business plans are always very similar, it gets easier the more we do it. So for the Alabama deal we just closed, and for our first fund, we raised like $4 million in around 2 months.
Mm.
So it's one of those things that 2 years ago, when we first started raising capital, like I couldn't even freaking fathom.
Yeah,
But
yeah,
yeah, it's easier because we have the time and because we're good at what we do. Um, Granted, everyone says right now is a tough time to raise, and like, sure, maybe, like, depends on your asset class, right? I think it's probably harder in traditional multifamily. I
sure.
think it's probably, harder in a lot of different things, but yeah, I mean, it still work though. Don't get me wrong. I was looking at earlier, okay, like how do we increase top of funnel, right? Like, so it's not just real estate anymore. It's like, here's the business of real estate. So, like, how do I get more eyeballs on what we're doing in the right eyeballs, for people who actually could benefit from this? So it's very marketing and then like sales, but sales is easy for us because we're just talking to people. Hey, this
Right.
is what we do. If you resonate with us, sweet. If not, no hard feelings. Um, but yeah, it's a business, and I'm always learning something different.
Yeah.
The guy who graduated from nursing school never would have thought that I was in a full on marketing and sales business and trying to find the right people who resonate with us.
Yeah, yeah, I know. It's like, and the interesting thing, I think I talked about this on last week's podcast, is like when you're trying to build a platform and an actual business, you're not just, a real estate guy going around and doing deals anymore. I mean, you have three different businesses. You have your acquisitions business, which is essentially a business. Property management is definitely a business. And then your
Definitely.
capital raising, it's three businesses, really.
Yeah. Yeah.
And it's tough.
Yeah. And what I found, so like they all evolved at different times, right? So like as you'd imagine, the acquisition business first, um, even though it was haphazard. So like, but like got pretty good with that. And then when Matthias came on board, the property management business thrived. And he's great at operations and leading operations. So like all the SOPs, all the things, all the people, the right people in the right seats are like good there. So I don't really have to worry too much about that. I'm still a little involved, but now I get better at acquisitions, and now I can also focus on marketing and sales. And Vinny is our investor relations partner, and so he's also working on the marketing and sales. And so yeah, it's evolving. How do all these businesses get better? And it's incrementally a little bit better. And then all of a sudden today I can look back 2 years ago and be like, damn, we've done some work.
Yeah, yeah, no, I agree. And when you're in it, it doesn't feel like it though. It feels like I'm
No.
not getting anywhere, right?
Like, man, I should be here, but I'm only here.
Yeah, yeah, yeah. It's like, hey, you guys closed 14. Like, I'm like, oh, we're not moving fast enough. We're not doing shit. And they're like, Derek, you closed 14 deals in the last 14 months. Like, what are you talking about, right? Well,
Yeah.
I think it's, kind of the gift and the curse of the entrepreneur, especially when you have high expectations for yourself. And inevitably you're going to compare yourself to someone else. And it's just like it never ends. Like you compare yourself to Grant Cardone, yeah, you're not doing shit, right?
Ah,
Right? Or
yeah. Yeah. Yeah.
so it's like, um, yeah, it's an interesting phenomenon with an entrepreneur that sometimes we need to sit back, and my wife will ground me in this, and is like, hey, you've accomplished a lot. You guys are doing great. Um, but yeah, I think it's good to have that perspective too.
Yeah. Yeah. I'm definitely. I do my best to remember to just be happy and like put my blinders on also. Like, Yeah, there's a lot of people ahead of me and there's a lot of people behind me. So like, why don't I just focus on what I can do? Because everything else is just freaking noise. There's so much noise. It's stupid. But I take a step back and I'm like, well, I don't have a job anymore. My wife, I retired her from teaching high school, and like we have, a lot of freedoms that we didn't have otherwise. And like I have more money than I've ever had because I mean, I'm a nurse and my wife's a teacher. It's not like the W-2s paid all the riches, but we do super well and we're able to do the things that we want to do. So like, I don't know. I do see people, but I'm just like, who cares? Who cares, man?
Yeah,
I'm
yeah.
doing good and I'm just gonna do the shit that I do and keep pushing myself.
Yeah, yeah, for sure, for sure. Yeah, I'm with you. And the problem with me is that I'm a sports guy. I used to play sports. I'm just competitive, like
Yeah.
naturally. And yeah, it's good to stay grounded sometimes because it's just, otherwise you'll feel terrible about yourself all the time. Even though you
And then
close
what's the
20
point?
deals. Yeah, you closed 20 deals this year. Well, so and so closed 25 deals and they were all 200 pads and up or something. It's like, oh, like okay.
Man. Yeah. Well, and then I think, okay, so I'm not the best, and that's okay, but how do I get better like that one person? Because that's cool. I don't know how did they do it. Good for them, but how did they do it? How can I incorporate some of that into my like our secret sauce sort of thing? I don't know. It's funny though. It's always in the back of my head. How do I do better? How do I do better? How do I do better? And it's definitely a challenge sometimes to be like, dude, stop being so freaking hard on yourself. Just do the freaking thing.
Yeah, yeah. Is there any, as you guys have grown, and I've watched you guys grow over the last couple years, and it's awesome, dude. So well done to you. Has
Thank
there
you.
been any, I guess, kind of break points that you've reached here recently where you're like, oh my God, we can't do this that way anymore. We have to change how we're doing this to get to the next level. Has any of that happened over the last 6 months?
Yeah, totally, totally. But it's funny. So Matthias loves it. He's like, I love watching things break, so I know how to make it better.
Mm,
And so it's like, what used to stress me out because my brain isn't 100% like that. Like that's him. He's like, he loves operations. He's like, yeah, let's keep going. And then when something breaks, we see the chink in the armor and we build it better. But like before him, that used to stress the hell out of me. I'm like, I don't know. I don't know how we're gonna do it. Now it's just like, okay, yeah. When stuff does go sideways, like how do we do it and how do we not have that issue next time? How do all these things make us better? Like how do we learn from it? Um, and yeah, I guess I mean I stress about stuff, but far less than I used to.
yeah, for sure. I think Matthias and Paul, my COO, would have a great conversation because I mean, I'll come into the executive meeting and like, hey, we should do this. This is where we're going. Like, this is, I think, like, and Paul's like, well, I'm just thinking of operationally how we're going to do that and execute on that. I'm like, dude, I don't give a shit. This is what we're gonna do.
Oh, that's perfect. I was at a conference and there was someone presenting on stage, and it was the visionary and the integrator, right? So um, the integrator like gets on and starts talking after the visionary. He's like, look, this guy, he's great from A to Z, but I have to take care of B to Y. And so for every time that visionary comes in and is like, no, no, let's do this. And he's like, okay, yeah, but I got to do all this other stuff first. And then anytime he keeps pushing, no, 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 we got to do this now. The integrator says, you do it. And then the visionary goes and sits down. And I'm like, that's good. That's, I
Yeah,
respect
yeah,
it.
yeah. Um, yeah, I was curious on the question about like the when we were talking about breakpoints and you guys fixing problems. Like, what is something that you guys have fixed and ironed out recently that you think's helped your business?
Oh, yeah. So, like the processes of like inside the property management company, right? So that's our main operations, all the property management stuff. And it's like, well, we just took over these new parks in Alabama, and the person who we thought was gonna like step up is actually uh, it seems a lot worse than we had thought. You know, we
Wow, imagine
everything
that.
leading up.
I've never
Yeah,
had that
yeah,
happen.
yeah. You've never had it. You've never had it happen, right? But yeah, so we were like, oh man, this guy's gonna be great and everything. And yeah, just post close, there's just all this friction with all the other people on the team. And it's like, why? Like, why? This is how I act all the time. I'm like, how can we all work well together? And then it's just like, why you being a jerk? There's no reason for it, you know? Like no one's coming at you. No one's trying to prove anything. We're all working on this together. Why you got to be a jerk? And so it's like, okay, well, now we know. Next time, like have different, people on board who can take over. And unfortunately, in this deal, there already were. There already were. But in past deals, there's been, we closed something and the person who we thought was going to be the community manager ended up being not good at all. And then you're just like, oh shit, like I wish we would have had number two or number three ahead of time, and stuff like that, little things that like sometimes people are like, tell me how you run a mobile home park. It's like, okay, it's relatively easy, but there's so many different things that can happen that you don't know until you're really doing it and figuring it out. And that's kind of, part of our job. It's like, okay, what is breaking? Well, this little thing, and here's how we fix that. So next time we don't have that. In the closing, we like at the very last minute, the survey comes back and there's like encroaching units on
Mm,
other things, and the bank's like, okay, there's 5 parks, we're only going to lend on 3 of them like this, and it's like, no, 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 no. Unfortunately, this came like if this came a month ahead, we would have figured it out. It would have been good, but it only came like the week of closing. So let's figure it out. So closing was pushed so we could figure it out. The lender lends on all 5 parks as initially planned. So what are we going to do next time? A month out. Let's get that survey, man. Let's figure
yeah,
this out, because if something happens, no one wants to be blindsided.
right, right. Yeah, and I think it is kind of an art form of like when you're going into these deals and you're trying to like, we like to go do our walkthrough because I can tell pretty much from the walkthrough or something if we're going to buy the deal. I like to check like I can pinpoint like, hey, the sewer is going to be the wild card here. So let's check that first before we spend a bunch of money on everything else. Because if that's bad, then we don't need to spend money. And so
Yeah.
it's like you have to balance like, hey, when you're going to order these reports and things. Because if you order all your reports first and pay for them, and then you check the sewer last, and the sewer is a disaster, and you close anyways, you're out 10 grand. Like it's not a lot of
Mhm.
money, but still, like, if you have a
It's
fund,
money though.
it's
Yeah.
still
Yeah.
money, right? It's
Yeah.
money. But you have to, because in your fund you're going to have some dead deals that end up, that cash for things is kind of dead money there, and you want to keep that as low as possible. Like you're inevitably going to put stuff under contract and spend some money, but you don't want we call it just dead deal fund. Basically, we don't want that account. We don't want to put more money in that account because it's money that we still have to earn that earns preferred return. It's money that's, you still have to pay back. And there is like that's stuff that you aren't, we can talk about it here, but until you actually experience something like that, I think to your point, like you have to be doing it to experience that. Like you can listen to all the podcasts and stuff in the world, but like it sounds easy, but it's actually it's not.
Yeah. There's definitely times that you're going to be pulling your hair out. And for everyone who's new, it's like that. That's just how it is. That's how it was for me. That's probably how it was for you, Derek. There's, times when you're like, oh shit. And it's not, it's not a bug, it's like a feature, right?
Yeah.
So, you know, people who are new, like you're going to do it and you're going to figure it out, and that's why you're going to be in that top 5%, 1%, whatever. You know, you're going to get wealthy off of this stuff because you accept that, yeah, shit's going to happen, and some of it's going to be, you know, that that red herring or whatever, where it's like, man, that just that black swan that came out of nowhere, and you're gonna figure it out, and it's gonna suck, and you're gonna hate it at the time, but then when you figure it out, you're gonna be better. And that's the thing, you know. Don't ask for it to be easier. Ask for yourself to be better.
That's
And
right.
I think that's the key. You know, that's what keeps us going. In that, like, well, this sucks, but right now, like right now it sucks, and when it's done I know we'll be better and better for it. So that's the key, dude.
Yeah, yeah, for sure, for sure. The more that I'm in this business and have experiences in it, um, people talk about like, hey, you can get into real estate with no money, 100% seller financing. Like, I think my personal opinion on that is that it's kind of bullshit. Like, it's like a needle in the haystack of you being able to do that because you got your earnest money, you have all these other expenses that have to come up. So you have to have some level of capitalization to make these deals happen. And I saw a video the other day. It was Pace Morby, and I'm not hating on Pace. I don't really have a problem with him, but I do have a problem with the information that he was spreading on this particular podcast. I'll see if I can find it and bring it up here because I sent it to somebody. But he was essentially saying, hey, like, hey, RV parks, it's the best investment ever. It's like no management. Like, I don't do anything there. A transient RV park, and I'm like, dude, that should be illegal for you to share that kind of information because our mobile home parks, yeah, when they're stabilized and it's all tenant owned homes, like that's kind of the case, but there's still stuff. I know a transient RV park is not going to be hands off.
No, no. And that is, you know, same. I got no beef. I like his mission that he wants to, you know, provide housing to everyone who doesn't have housing. Like, I mean, same, right? So I love that. I don't like the hype that it's like, here's the easy button. I think for his audience, he'd be like, look, here's how you can do it, and it's going to take work. It's not easy. Nothing is freaking easy. There's no substitute from putting the freaking work in. And so, like, if you just change it a little bit,
Yeah.
yes, you can absolutely do that. And anyone can absolutely do what either of us are doing. Neither of us, I don't think I know I wasn't born with all the money in the world for sure.
No.
And
No.
so, but we figured it out. And, you know, we watched other people, how they did it, and we got better and put the work in. And that's it. There is no shortcut button. There is no easy button. So, like, that's what I don't like, is like saying, oh yeah, this is easy. It's hands off. You don't have to do anything. And you just get mailbox money. And it's like a unrealistic expectation, man. It's a big letdown.
Yeah. Yeah. It's I don't know, Armand, right?
Yeah, yeah.
Yeah, so he had a deal listed that was seller financing, and I get his listings, or no, maybe I stumbled upon it on Corexy or LoopNet or something, and I read it, and at the bottom there was a disclaimer. It said something like, "Followers of Pace Morby, we appreciate your energy, like your energy and enthusiasm, but this seller is not doing zero." It was this whole disclaimer on that. And I was like, dude, that is hilarious. And I mean,
Yeah.
look, I appreciate guys getting out there and getting after it and trying to make something happen. I do appreciate that because at some point you have to. You're going to be the underdog at some point, and you do have to grind it out to get there. But I just thought that was kind of funny.
Dude, it's yeah. I so look, I like respect, like if there is an easy button, I'm always looking out for it. You know, it's
Yeah,
not
I'll
like I'm
take it.
against it, but shit, bro, I haven't found it. That
Yeah,
every time I want it, I'm like, man, I really wish I could just hire this out. Like, I really wish I could just hire property management out. The two times I've done it, it's been a shit show. It's been awful.
Yeah.
So what have we done? We keep it in house and we have systems and processes. And no, it wasn't easy, but it's easier now that we've done it. So like, I think easy is on the other side of the hard work and not like, oh yeah, this is just what I'm going to do. And it's going to, if that was true, everyone would be freaking doing it.
Yeah. Yeah. I think it's yeah, it's just interesting because I've never done anything and it was easy. It all sounded easy in the beginning. The insurance sales business, they made it sound all easy that you could come in and make some money. This business sounded easy in the beginning, but it has never been easy. Like the park we just bought, I told you it was easy. Um, the reason why it was easy is because we have great management systems that we've created through trial and error. And you probably wouldn't buy that park for your first park because the returns are a little lower anyways. So you're not going to get that easy, right? You're going to
Yeah.
get some park owned home conversion park with maybe some infill, and it's going to be a lot of work. It's going to be a lot of work.
And then, we go to MHI or SECO or whatever conference, and everyone who is a mobile home park owner, we all have, horror stories. We all have like this crazy shit happen. And that's again, it's a feature. It's not a bug. It's just how it is. Like if if you haven't had this, when it happens, it's gonna be scary. But like that the way out is through. We figure out we go through all that hard stuff and that's how we are successful, not from avoiding it, not from I'm going to do this perfect park and ever okay, another reason I don't like it is because it sets unrealistic expectations of things being easy, and then when it's not easy people give up. I
Yeah.
mean, why would they clearly this isn't the right thing that he's talking about because it's not easy. So maybe instead of RV parks, I'll go to mobile home parks, or maybe I'll do multifamily, or maybe I'll do wholesaling, or maybe I'll do buying a business, or maybe blah, 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 blah. And it's like, no, no, like they're all hard. You can be successful in all of them, but you have to be prepared to work. And so, like, it's telling all these people, yeah, you can do it, but like propping them up a little bit, and then as soon as they get into it, it just let them drop, and then they
Yeah.
just never
Yeah.
get into it. It's unfortunate.
Yeah. Yeah. I got a call from, and this happens from time to time, from a guy. He had bought a park in Arizona because it was cheap. There was a bunch of vacant lots, park owned homes. It was a disaster, but it was cheap. And he bought it and he could tell his friends that he owned a mobile home park. And he was like, asking for like what I would do. And then after I got all the info, I was like, dude, if you got somebody that wants to buy that right now, I would fucking sell it. Like, get rid of it. Like, cause it's there because the guy, I think maybe it was his sister or something. Great people, by the way. Um, they uh, they had other jobs that they had to keep going, right?
Yeah,
I'm like,
yeah,
dude, you just need to. I would just get out if you can take a break even on it and move on, right? Because
yeah,
and they didn't have the capital to move in homes. They didn't have the capital to do any rehabs. They didn't have any capital to pave the roads, right? They didn't
yeah.
listen to this show because I tell people that like, dude, you need to bring your capex up front. Otherwise, you're going to be trying to pay for stuff with cash flow, and that's not always easy to do. If you go into a deal and you're like, hey, I'm going to move in 20 homes here, and I'm going to pay for it with the cash flow, and your pro forma says everything's going to go perfectly, so you have the money to do that. Um, no, 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 no.
It sounds like my second park.
Yeah,
So in my first park I bought, and COVID hit, legacies financing 100% of the homes. I bring in the homes, get them set up, and like double the value in like 14 months, and refi, all the cash is out, whatever. So I thought I could do the same with the second park. I'm like, man, I'm a rock star. Of course I'm going to do this. And no capex for bringing in new homes or fixing up old homes or roads or anything. The deal limps along for 2 years until we finally just sell at break even, right? No one
yeah,
makes money, but no one loses money. And yeah, it was definitely a learning experience, definitely the worst performing park, but like I got so much better in knowing like do like make sure you're doing the stuff up front. You can't just do this magic creative shit like you did on that first deal, Tim. You got to have a better plan than that.
Yeah, yeah, yeah. I think it's important. And I think people get, you see this deal posted on one of the Facebook groups. It's like, 500 grand for 90 lots, 90% of them are vacant. And it's enticing because they've been trying to buy a mobile home park forever. And like, man, I can actually afford this one because it's only 100 grand down. I have 100 grand, right? I have
Yeah.
100 grand, right? Not thinking about closing costs or anything like that. Um, and then they get into it, and then they're like, it's great. I own a mobile home park now, but like, what are you going to do? Like, the value is there to be added. You needed another $1 million to add the value.
Yeah. Yeah.
Yeah. So,
Raise a million, for those specific people, come up with a business plan where you can give good investor returns to people and then raise it, or just sell it for what you have in it, and then just take it as a learned lesson. Either ways, it's doable. Just yeah, it's a good lesson. It's a very, very, very good lesson.
yeah, it's a damn good lesson for sure. Yeah, it's funny, like, and I'm sure you guys have hit, as you're growing, like, what are you seeing that you're going to have to change to get to the next level in business? Because I know, like, we've had to change things too, and it kind of piggybacks on the question that I talked to you about a little bit earlier. Like, there was stuff that we were doing at the beginning of the year, specifically related to acquisitions, that, like, Derek was still doing a lot of the acquisitions because I'm good at that, right?
Yeah.
Um, and so, but now that we've been able to raise more capital quickly and more easy, there's I have to focus on that, obviously, and then there's other stuff that I can't be doing on acquisitions anymore, and so we've had to like work through that. And that was one of the things that we've changed here in the last few months, and just because that needs systems and processes too, not just property management. And
Yep.
like, what do you foresee you guys are going to have to change in the next 6 months or so to get to the next level?
Uh, yeah, man, just definitely more marketing. I mean, in terms of acquisitions, we have things down, and it's not like I do 5% on the front end of acquisitions and 5% on the back end. But like, so we just started our own little mastermind, and I was presenting on acquisitions, but it's still it's a team thing, right? So like how it works, like our SOP, it's like I find a deal, I send it to our VA, our executive assistant, who puts it in the pipeline, and then we have an underwriter who's working with us, puts everything into Claude, does the first pass. Matthias does the second pass. He sends it back to me. I look at it and then create like two other, creative offers. So every LOI has a all cash at close and then two creative offers with it. It's like what works best for you. I send it out. I hear no almost all the time. And then my wife, Jen, is doing follow up. So she'll put it in the go high level and then she'll follow up with it. And like, just doing it enough that it's like a flywheel. So we're good there. Um, and then, yeah, just, opening up the marketing so we can bring in more qualified people who could really benefit from the LP positions we do. Like thank God, mobile home parks have like the best depreciation of any asset class. So, we get a lot of high earners who are like, man, I'm paying too much in taxes. I'm
Mm,
a doctor, I'm a dentist, I'm a business owner, but my wife doesn't work and she is, has real estate professional status. And we're just looking for ways to put money to work while also saving on taxes. So yeah, finding those people that we can really help and like opening up the floodgates as much as possible. So marketing is a big thing right now. But yeah, it's not that it's broken. It's just that it could be better.
for sure.
and it's exciting. I like it because I'm learning. I'm doing stuff new. Again, I'm a nurse. What marketing background do I have? Zero. But it's all learning now. It's cool.
Yeah, yeah, for sure. I mean, yeah, you're learning something every day, and I always look at I talk to people and see how they're handling things and see, okay, well, I like that idea. Maybe we can implement some form of that. But yeah, it's constantly getting better, and building the system at the end of the day, because it's not easy to do. It's not easy to do, and it takes work. It's not. Yeah, I'd love to win the lottery, right? I'd love to win the lottery, man. And then, like whatever, that's the easy button. But the likeliness of that is pretty low. So, what's next for you guys?
Just buying more. Just buying more. We found what we're good at, and we just do that. We're boring in that it's just. I mean, I'm excited by it, and the whole team's excited by it. Don't get me wrong, but like boring in that just keep doing more of what we're good at, and yeah, like every time it's like okay, like how can I do this better? How can I do what we're good at better? What bigger capital partners do we need to talk to? And sometimes again, that maybe it's like, oh man, I'd love to connect with institutional capital and buy these big things, and then we have conversations, and we're like, probably not.
Yeah,
So like the high level idea is cool. The details we're not really big into that. So why don't we just keep doing what we're doing and putting offers out, raising capital, and closing deals? Because I know that we provide value to everyone, to our tenants, to our investors, to ourselves. So why don't we just keep doing this?
yeah, yeah, for sure. And yeah, I agree with you. And that's what I love about the business because you can add, you're really adding value to every aspect of it, from the property level itself, the tenants, to us, to our investors. Like it really is a win-win-win-win-win situation. So.
Yeah. What about you guys? Same question for you. Before we go, what's next for you guys in the next 6 months?
Yeah, I mean, we'll have our second fund going, and yeah, I mean, we're just going to keep going that route and looking for, larger investors and larger check writers. It's just a little bit easier to do that. Like in fund one, we had some larger investors come in and just so made it a little bit easier. And we need our smaller investors too. We still need that, but we're looking for more like anchor investors, really. So we're finding more of those, and yeah, I think maybe we've talked to some institutional groups that have they're the favorable terms. They're not that much different than what we would actually offer our larger retail investors. So that
Nice.
we may end up going that route at some point, but I'm not going to go to one that's going to cut my head off.
Yeah.
And because it's a lot of work and it's not this isn't multifamily. You can't hire a third party property manager to do this. You have to have, right? You have to like you did it. You hired a third party property manager, so you already know, right?
Yeah.
But it's not it's a specialized opportunity. And in order to operate and especially to get these higher IRRs like you guys are getting and we're getting, like you have to know what the hell you're doing, right? So, but yeah,
I'm
we're gonna keep growing.
I gotta say, I'm glad I'm not in multifamily where the expectation is I'm gonna have a third party property management company. Because man, I hear horror stories all the time from friends who do multifamily. And like just yesterday, I'm talking to a guy and he's like, it was a great deal, but now we're looking at suing the property management company because they weren't doing what they said that they were doing. And I'm like, oh,
Lovely.
I'm so glad that we made our own property management company so we don't have that, like
Yeah.
at any time I can open up Rent Manager and see what's going on. There's no hiding.
Yeah, yeah. Although it does sound nice sometimes, like, hey, we're gonna get this deal and throw it over to the third party manager. It does. It sounds nice. There's a lot of
Yeah.
stuff that sounds nice. There's a lot of stuff that sounds good. But because the property management is the most labor intensive, and it's where most of the staff sit. It's definitely got your highest payroll at
Yeah.
certain points, and yeah, it's can be a pain in the ass, right? Um, so it sometimes I'm like, man, it would be nice to throw this off, but then I look at it, I'm like, man, we've gotten pretty good at this. Um, but it would be nice not to be involved in property management at all. It's the hardest part of the business.
Just know that the grass is by far greener, and it's or it seems greener, and then when you're
Yeah,
there, you're like, no, this is a shit show. This is awful. I need to go back to that other thing where I could actually get stuff done.
yeah, yeah, for sure, for sure. Well, Tim, how can people find you?
Yeah, WCGinvestments.com. Come and book a call. We'll let you know if it sounds like we'd be right for you, and as long as we're aligned, we love talking with people. Again, I'm very focused. We all are very focused on how can we treat people well, because I know the more people we treat well, the more it comes back to us, and we're all winning together.
Yeah, yeah, love that, love that. And Tim's on social media too, so you can probably find him on Facebook, or I don't know if he's on
Oh,
Instagram.
all the things. Tim Woodbridge. I'm not hard to find.
Yeah, yeah. Okay, well, thanks for coming on, Tim, and thank you all for watching the MHP Show podcast. We will see you all next week. Peace.